Welcome to Alpha Insights. I'm Lane. Today we're digging into NVIDIA and the AI momentum that's driving its numbers. With me is Drew, a tech sector analyst. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks for having me, Lane. Happy to walk through the landscape, the hardware, the economics, and what it means for investors.
All right, let's start big picture. Give us a plain English summary. What is NVIDIA right now?
NVIDIA has transitioned from being known mainly for graphics chips to being the backbone of a lot of AI compute. They sell high-performance GPUs, networking gear, and software, think CUDA, that companies use to train and run AI models. That combo has driven huge margins and cash flow.
Interesting.
Yeah, that's a good point. To put numbers on it, the company is generating roughly $253 billion in trailing revenue and about $160 billion in net income over the past year, which is extraordinary for semiconductors.
Those are big figures, and earnings have been beating too, right?
They have. The most recent quarter showed revenue north of $80 billion and earnings per share of $1.87, beating estimates by a bit. Analysts point to persistent data center demand as the driver.
So the business looks great, but the stock price baked that in. Walk us through the valuation picture.
Sure, NVIDIA trades at multiples well above typical chip peers. Trailing price to earnings is around 31 times, and forward is in the low 20s. Price to sales is near 20. That premium reflects expectations for sustained AI growth. At the same time, the PEG ratio is below 1, which suggests projected earnings growth may justify some of that premium.
So analysts are generally upbeat.
Yes, most coverage is positive. Many analysts rate it a buy or strong buy, and the mean price target sits in the high 200s, implying meaningful upside from recent levels. But again, that assumes the AI spending story stays intact.
Right. Let's talk moat. What keeps NVIDIA ahead versus competitors like AMD, Intel, and in-house hyperscaler chips?
Three things. 1. The CUDA software ecosystem. Developers build tools and models on it, creating switching costs. 2. Scale in design and manufacturing, plus deep ties with cloud providers, which helps pricing and rapid product feedback. 3. The move into systems and networking. Selling whole solutions, not just chips, lifts margins and stickiness. That said, competition is real. AMD is optimizing GPUs, Intel is pushing accelerators, and cloud providers are investing in custom silicon. Those are clear risks to pricing power over time.
So what are the main upside and downside scenarios?
Bull case. Hyperscalers and enterprises continue accelerating AI CapEx. NVIDIA expands into systems and software, margins hold up, and earnings compound. That supports multiple expansion. Bear case. Demand moderates. Hyperscalers shift toward custom or alternative accelerators, or a macro shock squeezes high beta tech multiples. That could trigger a sharp valuation reset.
What should listeners watching the market do in the near term?
So, a practical approach is to watch a few things. Revenue mix and gross margins to see if systems and software are growing. Comments from major cloud partners on their AI budgets, and the next quarterly report in late August for guidance on demand and channel inventory. For traders, expect volatility around macro headlines and earnings. Options markets are liquid if you want ways to express views without big directional exposure.
Got it.
Honestly, I was a bit surprised by how consistent the profitability has been, given the cyclicality of semiconductors. But high profit today also makes the stock sensitive to any small miss.
Fair. Quick reactions in 3 words. What's the one-sentence verdict you'd give listeners?
Uniquely positioned, valuation sensitive.
Right.
And to add to that, analysts note the PEG under 1 gives room if growth continues, but risk management is critical because multiples are already elevated.
Before we close, summarize 3 quick takeaways for listeners.
Number 1, NVIDIA sits at the center of AI compute with strong margins and cash flow. Number 2, valuation is premium, so the stock is vulnerable to demand shocks or competitive shifts. Number 3, watch hyperscaler spending, margin trends, and the next quarterly update for the clearest near-term signals.
Great. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks, Drew.
Thanks, Lane. Good chat.